Hi traders, Hubert here from Elite Currency. Today's video will provide a short-term analysis update on the NASDAQ index, and we'll be looking at the rest of this week and the beginning of next week to see what lies in store. Let's get going. So here we have our 4-hour chart of the NASDAQ, and if you've been following my previous videos on this index, you will remember that we are now, I believe, in the very final stages of a long uptrend which started at least in 2015, if not already longer, since 2009. And we're coming very close to a bigger correction. The question, of course, is when exactly. Now, at my previous video, price had dropped here into this area, and I was talking about a potential final move up, which has indeed occurred. And the price therefore stayed within these two black parallel trend channel lines, which is very normal behavior for a 5-wave impulse. And yeah, so we've almost created a new high, not quite yet, but looking at this structure a bit more closely from an Elliott wave perspective, we can see that we most likely had probably a wave 1, 2, another 1, 2, 3. So in principle, we should at least get another 2 more highs. So this move that's currently pushing up should create another high, and then another correction, and then a final high. That would make most sense if the upwards move indeed has started here. The alternative could be that this move here is a running flat of some kind. That would be more unusual, but it is possible, in which case we would only have a 1, 2, 3, 4, 5. So that would mean that immediately after this high is broken again and a new high is established, that could be the final. And the third alternative is that we are actually seeing a stronger extension to the upside, which means that this price action from the April 2018 low into this high may not have been a 1, 2, 3, but could have been a leading diagonal, namely like so. If you follow these new 2 black trend lines, something like this, in which case we would have had a 1, 2, 3, 4, 5 with overlapping waves. And this could mean that we've only seen the first wave of a 5-wave sequence up, which would mean that this has to now extend up higher, much more strongly. I do give this less of a likelihood, just because we are at a quite exhausted stage of the trend, but nevertheless, we've got to bear in mind that that is a possibility. So what I'm going to look for is I'm going to monitor how this price is moving upwards, and if I start to continue to see strong big candles, like if we get 4-hour candles that close distinctly bullish with not much wick at the top, and even if there's a bit of pullback, but if the momentum is much stronger to the upside, then I would be still cautious to call this to an end. But if we start to see a decrease in candle size soon after we're breaking into a new high, then there's a good chance that we are running now into a more serious topping process. So I'm going to monitor this. I'm going to let the moving averages here, this is the 21 moving average EMA band that we use in the SWOT system, and I'm going to monitor how price behaves to that. I want it to be close by, so we've obviously broken above the band on the 1 hour and the 4 hour charts again. If this is going to now move away from this band, then I want the EMA band to catch up with price as it's slowing down, and to give me the beginning sense of confirmation that really the momentum is turning down again. But from an Ellie wave perspective, we are coming very close now, and the only thing that would make me hesitate for a reversal would be if I, as I said, see continuously more momentum to the upside. As to potential targets for this final move up, we can have a look at Fibonacci targets. I shall draw the Fibonacci level across the whole length of wave 3, so from this point to this point. However, I've drawn them the other way around so that I get the zero line here at the base, and once I do this, we should get a sense of potential targets. Often the 61.8 target is a real target for the end of wave 5 relative to a wave 3. It could be that it becomes somewhat truncated and stops around this top already. That is a possibility that we have to accept, because the overall trend is already very mature, is very extended. We have an extended wave 3 relative to wave 1, which then can lead to a truncated fifth. But overall, the first, and therefore the most likelihood target, the most common one, would be found around here, around 7,460. Then the equality target of wave 1 could also come into the equation. So either the 61.8 or the 100 target of the size of wave 1. If we go back here, then we have the 61.8 at this top here, which was kind of already broken. So I have a feeling that we'll go at least to the equality of wave 1 then, most likely, which again lands in that similar zone, this time around 7,500. So therefore this tight zone here between 7,460 and 7,500 is a key reversal zone to watch out for. It also coincides with this trend channel line, so there's another point of confluence. So depending on how you trade this, you can wait for a break of the 21 EMA band of the 4-hour chart, which is how SWOT trades reversals. For more aggressive traders, you could take essentially pending orders within that area if momentum is distinctly slowing and divergence is present and such factors, with a very tight stop loss, and take it from there. That's it for today. I hope you enjoyed this video. Check out our website elitecurrency.com for more information and more free analysis. If you're interested in one of our trading systems, this would be the SWOT system or the CAM-MACD system, all to be found on our website elitecurrency.com. Thank you and see you next time. Bye bye.